29th of January, Wednesday, today at 7 p.m. we have the decision about the federal fund rate. Uh, and by the way, if you guys have not read the post that I shared in my channel, please make sure to give it a read. I already shared it in my channel, and I explained it in detail what exactly to expect from FOMC, like what exactly the decision is going to be about, or how exactly the market could be reacting to it. But yeah, at 7 p.m. UK time, we have decision about the interest rates. And a more important event in my opinion is going to be at 7:30 p.m., which is the press conference by Fed chair. So yeah, if you look at the probability graph, and by the way, only 3 hours and 52 minutes till FOMC, and if you look at the probability graph for 29th of January 2025's FOMC, it's sitting at 99.5% probability, which means 99.5% probability. And by the way, this probability is usually always correct. There have been only two instances. The first one was back in 90s, and the second one was during the COVID days 2020, when this probability was actually wrong. Our market was not anticipating what the original outcome was, what the original outcome turned out to be. So once again, 95.99% probability that there are not going to be any changes in the interest rates, which means that this has already been priced in. And situation has not changed much during the past few days. For example, no changes in interest rate. The probability right now is sitting at 99.5%. One day ago, the probability was at 97.9%. 1 week ago, that one is the probability was at around 98.9%. Usually, this probability is updated in real time based on the data like unemployment claims, CPI, inflation data, and the rest of the things. And 1 month ago, the probability was at 89.3%. A good way of looking at what exactly is the market expecting or anticipating. You can take a look at the poly market also. For 29th of January's FOMC, the probability for a 25 basis point interest rates increase is less than 1%. No change is obviously 98%. 25 basis point decrease is at 2%. 50 basis point decrease is less than 1%. So there is a very small number of people who think that maybe Fed would just go out of the box, and we would have cuts this month, during this month's FOMC also. But once again, this is not the majority of the market is expecting, and once again, there is 99% chances that this probability is going to be right, and there is not going to be something surprising at this time. So yeah, 99%, 99.5% probability of no changes in the interest rates. But once again, people pay the least amount of attention towards this thing right here, FOMC press conference, which is going to be 30 minutes after the initial decision about the interest rates is announced. So, what market is not expecting is this thing right here, FOMC press conference, that what exactly is going to be the tone of Fed, what exactly is going to be the language like. Is it going to be more of a hawkish tone, or more of a, dovish tone? So, this is not what market is expecting right now, and this has not been priced in. If you guys remember, just to give you a quick background, back in September when we had the first rate cuts in the past 4 years, that's when Fed said that there are most probably going to be, during their statement, in their statement they said that most probably there are going to be four rate cuts in 2025. And that's when the market was absolutely bullish on the news, and Bitcoin at that time pumped from, I guess if I remember correctly, from 58, 59,000 up to, like, 66, 67,000. And then Trump won the elections, and then during December's FOMC, back on 17th of December, when Bitcoin was trading around 108,000, once again the decision about the rate cuts was made. There was a 25 basis point rate cut. But if you guys remember, despite having this decision about the rate cuts, market was initially bullish, and at that time I made a post on my Twitter account also saying that I hopefully, the crypto bros, they would very soon understand what exactly it means, because once again, people pay the least amount of attention towards the statement, the press conference, and there is always a whole write up that's being shared about the data and everything, and people would not bother reading that. And in that data, it was exclusively mentioned. And by the way, I explained it back in those days. I was explaining this in the live stream also. Uh, in that statement, it was clearly mentioned that Fed was now looking at only two rate cuts, most probably that they had pushed their inflation targets from 2026, from 2% inflation in 2026 to 2027, and they were only going to do two rate cuts in the year 2025. So once again, this is not something that market was expecting, and then Bitcoin reacted obviously just like the other markets also. We had a move from 103, 104 all the way down to 92, 91,000 just in a matter of few days. Okay. And people were just wondering that what exactly happened, although 25 basis point rate cut, but still market is reacting negatively. No, and that was mainly because of the tone that the Fed had. Okay. That tone was not good at that time, was not good obviously for the market, because decision about the rate cuts, uh, having fewer rate cuts was made. And now, as per the JP Morgan, as per the American Bank and the rest of the big institutions and banks, most probably, as per their expectations, as per their data, most probably there is not going to be any rate cuts during this year 2025, which is actually a kind of a bearish thing for the market and a little bit of a surprising thing also. We'll see what happens, because during the press conference we'll see what Fed actually has to say on this. And this is a very interesting kind of situation also. The reason for this is because Trump on one side, just before his inauguration, he said that interest rates are too high and we should be having interest rates, cuts in interest rates. And then soon after his inauguration, I guess like 4 or 5 days ago during a press conference, he said that uh, once again the interest rates, they are too high and Fed should be making a decision to cut the interest rates, because this is kind of very obvious also. Trump is, one of the only presidents who who has set the performance benchmark as stock market, right? He would judge his performance as to how stock market is performing. Okay, he did this during his initial term, during his first term also. Whenever the stock market would go up, create a new all-time high, Trump would always make a tweet saying that, look how good I'm performing. Okay, so the rest of the presidents, they usually judge their performance looking at the economy and maybe a few other things, unemployment claims and the rest of the things. But Trump is that one guy who would judge his performance based on how stock market is performing. And I'm not going to get into the details of that because very few people actually understand economy. But having a strong labor market and having higher inflation and having a strong GDP, this is usually good for the dollar, but this is not usually good for the interest rates. Okay, so if you have a strong econ, if you have strong GDP, if you have a higher inflation, which is by the way the year on, the core inflation is still above 3%. By the way, I guess it's at 3.2% right now, and Fed has been doing their best to take it below 3% target, down to 2%. But the important part is that the labor market right now, it's strong. GDP, we have good data over there as well. Inflation is not going down, and this obviously translates into the fact that Fed would obviously say that no, we are not going to cut interest rates. Okay, and this would be eventually bad for the stock market and the and the rest of the financial markets and a few other few other financial markets. Obviously, some of these financial markets, they have different correlations, but that's how basically it works. So the point is that in order to put in the simplest possible terms, you would have to take a look at what Fed has to say on this. On one hand, uh, president is saying that the interest rates are too high and Fed should be making a decision about this. And Fed is saying that we make our decisions only based on data. Anything that we do is completely data driven. We don't we are not influenced by any kind of political decisions. And when Trump was also asked about this, that the federal bank operates independently, or at least they claim to operate independently, his response was that the journalist asked, what authority do you have to ask Fed to cut the interest rates? And to this to this Fed, Trump basically responded that he understands economy and interest rates and the rest of the things better than Fed or any other people who are making decisions, who are in responsible positions making decisions over there, which is a kind of a ridiculous thing, right? Because how would Trump understand economy better than these people? But at least Trump we all know him. He obviously claims to know economy and interest rates better than any other people who are working in federal bank. And he says that, interest rates should be cut, and that's how stock market would perform good. And he would obviously be able to, take credits for this. But Fed is saying that, if only if inflation starts going down, if we don't have a strong labor market, or if we have another other important data supporting that, okay, we should have lower interest rates, only then they would be making this decision. But once again, nothing out of the box is going to happen. Nothing out of the box has ever happened except for two instances back in 90s and 2020 COVID days. Those were some extraordinary kind of situations. Do not expect Fed to cut interest rates. That would be very, very surprising thing, and that would be extremely bullish for the markets. If that were to happen, I'm telling you, you would have a straight candle up to like 115K, 120K. Obviously you cannot have, because once again, 99.5% probability. And by the way, this is not just an ordinary thing. This data is being updated in real time based on jobless claims, being based on inflation data, unemployment claims, and everything. So it's not something random or ordinary. Obviously poly market is just people betting on a certain outcome, but this is not random. But both of these important pieces of information are giving you the same outcome. Okay.